I do have a full presentation planned, and so why don't I start out just by saying if folks can type in questions, and more importantly, if you want to learn about 2Sigma trading vis-a-vis the stocks in your universe and the stocks that you trade, and whether or not those stocks fit the parameters of 2Sigma trading, at the end, I'll make sure I save time to go through your tickers, but go ahead and enter them. I believe Jeanette wants us to do that in the chat box. I believe I can see the
No, Jamie, they're going to put them in the questions box. All
I'm
questions,
sorry.
all comments, all answers will be in the questions box. But you're good.
All
You're
answers
solid.
are in the question box. Okay.
Yeah. Yeah.
So now I'm in the question box, and I suppose I have to scroll all the way down because I'm getting all of the questions.
Yeah. The question, I wouldn't look at that right now. That thing is acting up. You're going to have to scroll way down, and there's a delay.
I've got it figured out, so we're good to go. So folks, do me a favor and type in your ticker symbols along the way. That would be really fantastic. And of course, I think you've been doing this along the way, it sounds like, by getting people answering trivia questions and what have you. This is my favorite time of year. I'm sure it's a lot of people's favorite time of year. And one of the things that make this my favorite time of the year are the holiday movies. So I'm just going to throw it out there to the audience. If I say the words pork bellies, I want you to tell me what holiday movie pork bellies is featured in. If you're old school, you probably have this. If you're a Robin Hood trader, maybe a new generation, a new millennial, maybe you don't remember this movie so much, but pork bellies and frozen concentrated orange juice. Those are my two clues for my favorite holiday movie, Jeanette. And folks can put the answers to their to see if they know the answer to that movie. Put that in the question box. All right, so 2Sigma strategy for finding hot stocks. That's what this presentation is all about. Let's dive in. And I'm, like I said, gonna leave plenty of time at the end to go through the strategy with any stocks that you want me to look at and answer any questions that you all have. But please save those questions for the end of the presentation. In this free training, we're gonna learn about what exactly is 2Sigma trading. It sounds relatively fancy. It's not. It's just a fancy word for standard deviation. So 2Sigma trading is all about standard deviation. But the secret sauce to the 2Sigma trading service that I founded here this year is how to trade the right 2Sigma stocks. And with my Rational Trader podcast co-host that Jeanette mentioned, Louis Navalier, we sort of my chocolate and his peanut butter ran into each other, and we found the perfect combination to find the right stocks to trade using the 2Sigma signals that we use to identify trading opportunities. Really what we're doing is we're focusing on reversion to the mean being a very real phenomenon. So we'll teach you all about that, talk about how that works. Then we're going to break down what's really been what I call the 2Sigma trading November to remember. It's been one heck of a month, Jeanette. I just did a calculation real quickly before we started this presentation. And I'll talk about this a little bit in another slide, but if you put $1,000 into every trade that we closed in the month of November, you would have more than doubled your money. And that's in 1 month of trades. And I think the total number of trades was something like 13 trades. So it's been a heck of a November to remember. And really every month for 2Sigma trading can, and because markets vacillate, we simply take advantage of those arbitrage opportunities with our 2Sigma trading system, and every month can be a month to remember using the 2Sigma trading approach. And finally, at the end of the presentation, if you stick around with me, I do have one trade that you can make right now in this stock has hit our trade signal. It's I think a phenomenal opportunity, and make sure you stick around to get that name for at the end of the presentation. But first, the important risk disclaimer. I'm sure you've heard this multiple times, but I'm going to read it through one more time. There is a significant risk of loss in all trading. Past performance is not indicative of future results. All trading outcomes are hypothetical, no guarantee of actual profits. Hypothetical performance results have inherent limitations. They do not represent real-world trading and cannot fully account for the impact of market factors and trading psychology. Under no circumstances will the company be liable for any indirect, incidental, or consequential damages related to trading losses. You must be fully aware of the risks and willing to accept them before investing. I'm sure you've all heard this before, folks. I like to just call it common sense. You know, do what makes sense for you from a risk parameter standpoint. Make sure it's within your tolerance of risk, and make sure that it fits your goals and objectives for trading as well. And with that, we can continue. If I can change the slide. Oh, there we go. My computer's going slow for some reason, Jeanette. I'm not sure if that's the webinar software or what have you, but if I have technical difficulties, I apologize for that. First, who am I? Jamie DeLugash. I'm the founder of 2Sigma Trader. I've been in the investment publishing business for a long time. Started out with my dear friend Al Frank, the CEO of Al Frank Asset Management, the publisher of The Prudent Speculator. That's where I learned all about value investing and being a fundamental value investor. From The Prudent Speculator, I started my own publication called The Rational Investor. And as Jeanette mentioned, I'm the co-host of the Rational Trader podcast today, and now the founder of 2Sigma Trading. I'm a veteran trader and strategist, known for my ability to capitalize on market volatility. I use technical analysis, quantitative research. I kind of mix and match a little bit of everything, which I guess is why I've been in this business so long. You know, there are folks that just focus on the quantitative side, and there are folks that focus on the qualitative side. But if you really want to do this well, I think you have to be able to combine all of it, and that's what I try to do. I've been, I woke up on Thanksgiving, Jeanette, and I realized I've been doing this for a long time. It feels like just yesterday in the mid 1990s when I got started, but lo and behold, that was 30 years ago. So anyway, what is 2Sigma Trader? 2 years ago, I started podcasting with my friend Louis Navalier. I mentioned that previously. And during our podcasting, there was a common theme that developed that was mentioned time and time again by Louis, specifically related to his highest rated stocks. And he noted that there was a lot of manipulation that happened outside, mainly outside of earnings season, for about 8 months of the year, because companies report earnings one time a quarter. There are 8 months during the year where super large hedge funds can manipulate markets. And if you think markets are efficient, well, maybe in some moments in time they are, but the reality is markets most of the time are inefficient. And that's the good news, because those inefficiencies are what can be exploited by astute traders using whatever system that you're using. And we've developed our own here. When Louis kept mentioning this reversion to the mean, I wanted to put some definition around that and see if I could quantify what he meant by that, to see if there was an opportunity to exploit these manipulations that are happening at the large hedge funds. So what is 2Sigma Trading? It's a rules-based trading system featuring only the highest rated stocks of one of the nation's highest rated stock pickers. I mentioned his name, Louis Navalier. He, according to Holbert's Financial Digest, is, if not the best stock picker in the nation over a long period of time. He's right there at the top. And what we discovered is that using a rules-based system against his highest rated stocks, specifically the 2Sigma trading system, we had a formula for trading success. What exactly do we do? Well, the key, and this is really important, we only trade the highest quality, top rated stocks. And if I can take a time out here to mention why this is so important, I think it pays to spend a little bit more time on this. When you learn what I'm doing here with 2Sigma, I'm not reinventing the wheel. I'm basically utilizing a statistical phenomenon called 2 standard deviations and measuring a stock based on its 2 standard deviations above and below the mean price of a stock. And I know for those that aren't familiar with these concepts, it may sound overly complicated and difficult to grasp, and that's really not the case. If you just think about it as on the financial portals, there's something called Bollinger Bands that you may be familiar with. Well, the Bollinger Bands does all of the work for you and gets you these standard deviations above and below the mean. The trouble with just blindly following Bollinger Bands is you don't, well, number one, the stock market is a big place. There are over 6,000 publicly traded stocks in the market. How does one really know what stocks I should be trading? And this gets back to what our secret sauce is. By trading only the highest quality stocks, and specifically in Navalier's universe, Louis utilizes a quantitative approach using multiple factors of fundamental data, things like earnings growth, revenue growth, margin expansion, things like whether or not the analyst community is liking a particular stock. And so what I love about Louis' universe and what I've discovered since doing this project with him is that when you layer on his stocks onto these Bollinger Bands, and I'll talk about this a little bit here in the next slide, the 2 standard deviations is a simple statistical measure. And the best way to think about it, if you pull up a Bollinger Band on any stock, what those 2 lines are telling you is that 95% of the time, a stock is going to be trading in between those bounds, in between 2 standard deviations below the mean and 2 standard deviations above the mean. So that's very powerful, because what any trader wants to do to be successful is put the odds in your success. So by utilizing a breach of 2 standard deviations below the mean and knowing that 95% of the time that stock price is going to get back above that lower bound, you are putting the odds in your success, or putting the odds in your favor for success. So by trading the right stocks, the stocks that, and I don't care what the reason is for a stock to trade 2 standard deviations below the mean. What I care about is that I'm looking at a high quality stock with super strong earnings growth, super strong fundamentals, super strong favorability ratings in the analyst community, margin expansion. These are all of the things that make investors want to buy a stock. And if a stock has breached 2 standard deviations below the mean, you are now putting the odds in your favor for making a successful trade. So let's talk about Bollinger Bands. And maybe if you're on your computers at home, I can show you how super easy this is. I use big charts as an example of a financial portal where you can find this data. But go to your whatever financial portal you're using and type in NVIDIA. Now, once you're on the NVIDIA page, you should be able to find something called charting or indicators that you can use to make a nice chart like I have here on the screen for NVIDIA. Now, I use a 1 month period. That gives me a nice snapshot of how a stock is trading in between the 2 standard deviations above and below the mean. And with NVIDIA, you can see here that most of the time, and that's why I said 95% of the time, the stock is trading in between these upper and lower bounds called Bollinger Bands. And you can get this data on any financial portal. What you can't get, by the way, is what are the highest rated stocks that are going to put the odds in my favor. And that's what we're going to be offering folks with our 2Sigma trading service. But why does this work? I already mentioned that by using the highest rated stocks, we know that the fundamentals support a higher stock price. And again, this is in general, it doesn't work all of the time, but generally speaking, this is what puts the odds in your favor. The market is not efficient. Hedge funds are manipulating the market for at least 8 months out of the year, if not more. And earnings, when the data actually becomes known, when a company releases corporate earnings, that's what then brings in the buyers to push that stock back up in between the bounds of the 2 standard deviations below the mean and above the mean. All right, the process. Okay, I only consider the highest rated stocks in my analysis. And like I said, there are 6,500 publicly traded stocks, and that's a lot of stocks to follow. Every week, taking Louis' factors, his fundamental factors, I know, and I can divide those 6,500 stocks into top and bottom fractiles. And so what I want to do is I'm only considering the highest rated stocks in my analysis, and those are the ones that I put on my watch list for making a 2Sigma trade. Then the rules that I follow are very simple. If one of my highest rated stocks breaches that 2 standard deviations below the mean, boom, it triggers a trade. Immediately, I want to get into that stock. Reversion to the mean and 2 standard deviations above the mean are my exit triggers. And again, those numbers are always changing because the stock price changes every day. So as your journey of these 2Sigma trades goes on day after day, you are looking for your stock to get back to the mean, and that's when we put in our. I don't like using actual stop losses. Just that's my own personal bias. I think brokers manipulate that. So we just put in mental stops, and then I send out trade alerts whenever we have an open trade based on the stock hitting its mean or 2 standard deviations above the mean are the 2 different stop triggers that I use to exit a trade. How has it worked? Well, the numbers really speak for themselves. Started doing this in March of this past year. We've had 111 round trip trades, and 77% of those trades have delivered positive returns, averaging 5.27% per trade. If you do a simple annualization of that 5.25+% return, you get an annualized return of 88%. And I said earlier that November was a month to remember, whereby if you put $1,000 into each of these trades that we closed in the month of November, you would have generated over $1,000 of profit. So it's super, super simple, super powerful, but like anything, for some reason, this is difficult to do. And I think the answer is, trading is so complex. The markets there's so much information. It's kind of like walking into a casino. I don't know if you've ever had this happen to you, but it's like all of the bells and whistles are going on, and it almost puts me in a coma. There's just it's called being overly stimulated. And that sometimes makes it very difficult to see the trees through the forest. And with 2Sigma trading, I try to do that for you, finding the winners time and time again. Let me give you some examples of some of the 2Sigma trades that we've made in the past 6 months here. This one was a trade that we opened on September 16th, closed it on October 2nd. I should mention the average holding period of our trades. We're not day traders. I'm not looking to get in and out for the quick. I mean, I am, I guess, relatively speaking, a day trader, but not intraday, if that makes any sense. So the average holding period is 21 days on our 2Sigma trades. This one, Pilgrim's Pride, it was a high-rated stock, and you can see on the chart here, I'm just using the Bollinger Bands. It's a high-rated stock, and back in September, mid-September, here it broke down below 2 standard deviations below the mean. We put on a trade, and eventually on October 2nd, here it crossed not only the first threshold of reaching the mean price, but it reached the 2 standard deviations above the mean. And so this one we closed for a gain of 18.1%, and we did this in just over 2 weeks of holding. The next one is Super Microcomputer, which I've traded several times now. This is a very volatile stock. It's been in the news recently, mainly on questions about its accounting and being the target of a short seller. But again, I'm agnostic to the reasons why a stock might trade for 2 standard deviations below the mean. I'm really not. I don't care about that because I've already done the work up front by only targeting these highest rated stocks. And Super Microcomputer is just one of those top fractile stocks. Back on August 7th here, this one broke through 2 standard deviations below the mean, and it then went on a nice little run, got above the mean. But you can see here, and this is the first trigger, and why we put the first trigger at the mean to set a stop. We sold out of the stock when it broke down below the mean price, and we got out on August 22nd for a gain of 16.5%. And I should add, you don't have to be sitting by your computer, tick for tick watching this stuff. Again, market timing is important, but it's not really the end all be all, especially for 2Sigma trading. We have the stop in place. We saw that it was breaking through. We put out a trade alert, and we got out. We didn't need to be glued to our computers to generate these fantastic results. The next stock, Chipotle Mexican Grill, another really high-rated stock based on its fundamentals. Back in August as well, this was on August 13th. You can see it broke through 2 standard deviations. This one's interesting because the reason for the sell-off here was because its CEO quit and went to work at Starbucks. I mean, is that the most asinine thing? I get it. A CEO is an important person. That's why they do make the money that they make. But my goodness, for a stock like Chipotle that has such a wonderful business model, its profits are growing at a fantastic rate. Its revenues are growing. Its margins are expanding. Anyway, we just use this as an opportunity to get into the stock on August 13th. And then again, 3 days later, it got above the mean and then broke through. Now this one, using the mental stop, we got closed out at 9%. You can make the case that I should have held on, but again, just trying to follow the rules. I'm not a die-hard rule follower, but for the most part, I follow the rules. There's a reason why you have the rules. You don't want to deviate from those rules too often. But in this case, you could make the case that holding on to Chipotle beyond this, and in fact, it's gone up to $60. We took a nice 9.25% gain and got out of Dodge. But c'est la vie, as they say. Now, as for the November to remember We round tripped 14 trades in the month of November. 13 of them were winners, and I'm going to give you those examples here next. It was such a remarkable month, and lots of lessons, I think, to be gleaned, and that's why I wanted to present these today for you all to learn as much as you possibly can about this powerful system called 2Sigma trading. I'm including the one loser in here because there's great lessons to learn from that trade as well. Super interesting. So moving on to the November to remember, the first stock that I closed on November 6th was a trade that was opened in mid-October. United Healthcare, it was a top fractile stock. You can see here it traded on October 16th, 2 standard deviations below the mean. That's our trigger to buy the stock. And on November 6th, it traded above the mean. That's when we had the mental stop. It went below the mean. We closed it for a 7.1% gain. And you can see now this one traded sideways for a number of days after we exited the trade, and then it popped. And again, you can make the argument, well, why didn't you just hold on to it? But again, we're trying to follow the rules as much as possible. Down here, you can see one of the features, if you become a member, and we do have a special offer for trade giving. It's called 90 for 90 days. By the way, Jeanette, if you're listening, I hope you are. I went to the gym this morning, and this is just a total, I'm sidetracking here, but I want to share this with everybody because it's weird how the stars align. My gym was offering a special today, 90 days for $90, which is exactly what our offer is here in 2Sigma trading. So very strange. I, of course, had to sign up at the gym. But one of the things you get if you do sign up for 2Sigma trading is a membership into the Discord where I commentate on all of our trades like I did here with United Healthcare in real time, so you don't miss any of the action. It's kind of a fun little feature of the service. But United Healthcare, we closed for a nice 7% gain. Comfort Systems is the next stock. It too, all of these stocks are going to be high-rated stocks. Otherwise, we wouldn't trade them. And that really is the key to the approach of 2Sigma trading. This one on October 25th traded 2 standard deviations below the mean. We got into the stock at that point, and on November 6th, it jumped up to 2 standard deviations above the mean, and that's when we decided to close the position up here on November 6th for a gain of 16.7%. Vistra is the next November winner. We closed this one on November 8th. We only opened it on November 4th. It too was a high-rated stock. And wow, this was a 23.8% gain in 4 days. So just shows you how sometimes you can really have some powerful moves in a short period of time utilizing this approach. DaVita is a medical manufacturer and got into that stock on the 1st of November right here. Now, interesting point about following the rules. It is not an absolute that once a trade breaches 2 standard deviations, I do use some subjectivity, folks, and I want to be clear about that. It is not like some of the software programs maybe that you've been learning about here previously, where the formula is just put in and bam, it punches in a trade. I'm old-fashioned. Call me old-fashioned. I don't really care. I like using subjectivity to a certain degree, and in this case, on November 1st, I decided that it was time to get into DaVita. There were reasons why this stock dropped on this day, and I wanted to wait a day or two just to let the dust settle before entering the trade. It was still 2 standard deviations below the mean because of such a huge move downward. I was able to still get into the trade, and on November 19th, we exited the trade right here when it got above the mean and then dipped below the mean, and we decided to lock in our profits and lock in an 11.4% gain. I mentioned Supermicro Computer. We've traded this one multiple times, and on November 4th, we entered another trade into Supermicrocomputer. This time we were able to get out on November 19th for a gain of 10.6%, again following the rules where we got above the mean price and then it traded below the mean. That's a mental stop that triggers an exit of the trade, and exit we did. Now you could argue on this one too that well, you could have made more money if you just held on to it. You know, that spilt milk, water under the bridge is hindsight is 2020, as they say. And I'm not going to quibble with the results of 2Sigma trading following the rules pretty much time and time again. Next up is Idaho Strategic. And the reason I wanted to show, by the way, all of these stocks, there's all sorts of different sectors. There's no rhyme or reason. We're not excluding any sector. I will exclude REITs, for example. I do not include them in the universe, but for the most part, you name the sector. If it is a high-rated stock and it trades 2 standard deviations below the mean, I'm going to want to get in it. And here on November 11th, we traded in Idaho Strategic Resources. The ticker on this, by the way, is IDR. And on November 19th, it traded above the mean and then dipped below that mental stop, and we exited for an 11.1% gain. If you notice on these trades that are all above 10%, that's more than double our average return since inception. So again, you could make the argument that maybe you would want to hold on, although in this one, you know, it's really only moved sideways. Here's the loser that I thought was interesting to talk about, Perspective Therapeutics. This stock, I entered a trade on September. You can see it dipped below 2 standard deviations below the mean in the middle of September. This trade did not work out for us. It went sideways, sideways, sideways. It had a big sell-off here, got back. You know, again, the beauty of these bands is that 95% of the time, a stock's going to get back into these bands. So I wasn't too worried when the stock traded so far below the band. I trusted the process. I trusted the statistics, and sure enough, it got back above where I needed to be. But it didn't do anything. It kept drifting lower and lower. At the end of October, the beginning of November, it started to show some life. And on November 7th, right here, it was trading above the mean, triggering that exit mental stop, and then it traded below the mean, and that's when we got out. So here's an example, and I think it's a really good one. We got out at $12 a share or something like that. I don't have the exact dollar price, but we took an 8.6% loss on this trade. But you can see here, after the election, this stock really just got crushed and is now trading below $5 a share, which would have been an even bigger loss had we not followed our rules and exited this particular trade. So sometimes you can learn some important lessons by focusing on the trades that don't work out. Finally, eBay, and this is just another good example. And again, it's a high-rated stock, has great fundamentals, great earnings growth, great revenue growth, great performance against the number. It beats more times than it doesn't. The analyst community is behind this stock. And on November 1st, well, really October 31st, it tanked below 2 standard deviations below the mean. Using that subjectivity to enter the stock, I waited a day, got in on November 1st, and then held this one up to 2 standard deviations above the mean. We broke above that. That set the mental stop to exit the trade. And sure enough, we went back below 2 standard deviations above the mean. And we closed the trade on November 21st, which happens to be right about our average holding period of 21 calendar days. And this one was a 12.3% gain. All right, so those those are some great examples of how 2Sigma trading works. I could go on and on. As I mentioned before, we've done 111 round trip trades, and 77% of them have been winners. So let's talk about what's happening in the markets today. Well, I call it the Red Dawn. It's a brave new world. If you've seen that movie, Red Dawn. Speaking of movies, by the way, the answer to my own trivia question was, I didn't look back at your answers, but Trading Places was what I was referring to when I mentioned pork bellies and frozen concentrate orange juice is what the brothers traded when they went into, I think that was filmed at the World Trade Center, believe it or not, which is kind of sad. But anyway, moving forward, looking at the market today, we have a new slash old president coming into office, and I call it the Red Dawn Rising. What does that mean? Well, for 2Sigma, it doesn't mean anything other than we keep going on, doing what we're doing, trading high quality stocks using the 2Sigma approach, which is number one, is the stock highly rated? Now, for members of the 2Sigma trading service, every 2 weeks, I go into the universe of 6,000 stocks. I look at the top fractile, and I put together our watch list. It's one of the I think best features of the service. People can't wait to get their hands on our watch list because, like I said, the secret is what stocks should I be trading this way, and it's that quantitative, highly rated stocks that is the answer. Once we have those high rated stocks, then we can go into any financial portal, get those Bollinger Bands, calculate the mean, get the 2 standard deviations above and below, and then find out whether or not a stock has triggered a trade or not. So some stocks that are super popular, I wanted to talk about today. NVIDIA is a highly rated stock, and you might be wondering, well, is this a stock I can trade? Well, let's take a look. Here's the 1-month chart of NVIDIA. You can see on Wednesday, right before the holiday, NVIDIA touched 2 standard deviations below the mean. Now, it didn't break through 2 standard deviations, so this one's on my watch list. I'm not going to place a trade on NVIDIA, but it's definitely one you want to keep an eye on because NVIDIA, no matter what happens going forward, promises to be one of the most popular, if not most productive trading stocks in the market. And you can trade NVIDIA using the 2Sigma approach. How about Costco? That's another popular name out there. Might not think of it from a pure trading standpoint, but I like to follow Costco because it is a well-run company that is growing at a really nice rate from a revenue and earnings standpoint. It's a top fractile, highly rated stock. Now this one is trading above 2 standard, well, it was trading above 2 standard deviations above the mean. So there is no trade to make on Costco, but it is one to keep an eye on because it was early November, late October, Costco was trading 2 standard deviations below the mean. And so from time to time, and that, to me, this is the fun part about 2Sigma trading is that, you know, you might go, well, shoot, this one isn't tradable, but that can all change in a heartbeat. It doesn't take much to change the fundamentals, and the market dynamics can get into your favor, creating an opportunity for you to make some really good money trading these highly rated top fractile stocks. Another name to put on your watch list is Pembina, ticker symbol PBA. This one is also a highly rated stock. You can see back on November 6th, it had an event here. I believe this was related to earnings, where it traded way below 2 standard deviations below the mean. And then it worked its way back up 2 standard deviations above the mean. So again, this is just another example of the power of Bollinger Bands. But remember, if you want Bollinger Bands to work in your favor, and there's a lot of folks that use Bollinger Bands, I haven't found a system that does it anywhere near like what we're doing here with 2Sigma trading. And so I really do encourage you to get involved with the service. If not, you can take it for a test drive and see how it works. And if you don't like it, you can always walk away from it. But I think once you get in, if you're like me, you're going to get hooked. It really is a fun service. So on Pembina, there's no trade to make today, but definitely put it on your watch list because it is close to that 2 standard deviation below the mean. All right. Time for, I promised you, one hot stock that you can absolutely trade right now. Now, this is hard to do in real time because I was invited to present here and I wanted to prepare well in advance, and so markets always change. But earlier this week, when I selected this stock, it was trading 2 standard deviations below the mean. And I'm talking about Tenet Healthcare, ticker symbol THC. This is a hospital healthcare provider. It is a highly rated stock. It has a great fundamental ranking. The stock, as you can see, after the election was pummeled, and really most of the selling took place after Kennedy Jr. was nominated for his position in the cabinet to be the health czar, if you will. And I think that freaked a lot of people out. Anybody associated with healthcare stocks, drug company stocks, really took it on the chin because of an expectation of what the world is going to look like. Well, I can tell you those expectations often don't turn out the way people think. First of all, Kennedy hasn't been confirmed yet, and I do suspect he will get confirmed, but it hasn't quite happened yet. And so if for some reason he wasn't confirmed, that could be a catalyst to the upside. I have yet to add this to the 2Sigma trading portfolio. I did not, because I knew I was going to be talking about it here. I did not add it to our portfolio. And now it's trading just above 2 standard deviations above the mean. I call this a little bit of a rule buster trade. I'm going to get into it. It did breach earlier in the week on Monday, I guess that was. So take a look at Tenet Healthcare. This is a stock you can absolutely add to your portfolio right now. And if it goes to form, we can expect a 5.25% gain on this one in 21 calendar days. All right. Now, I'm assuming, and I haven't looked at the question box to see if you're putting in any stocks that you want me to take a look at. So I hope you've been doing that. I would love to run through this process in real time with you and see whether or not the stocks that you have questions about, whether or not it would make for a great 2Sigma trade. But before we get to that, I want to go through the offer for getting you involved with 2Sigma Trader. The numbers speak for themselves. I mentioned this before. 77% of our stocks trades have been winners, 111 round trip trades. This is all documented in the service, and you can see that once you become a member, you can have access to those trades. 87% annualized, 5.25% average per trade. You, I promise, will not find these trades anywhere else. And the secret is they come from this universe of high-rated stocks, and that there's a lot of work that goes into doing that. And that's kind of our 2Sigma approach, and add in the Bollinger 2 standard deviation spin, and away you go. So I teased this before with my story about my gym. We are letting or accepting members for a limited time, 90 days for $90. With your membership, you get access to that watch list that I update every 2 weeks. I do with my Rational Trader podcast co-host Louis Navalier. We do daily market 2Sigma videos where we try to talk about 2 stocks at a minimum each and every day. You'll get access to the Discord room. You will get all of the trade alerts with the stops, the exits, the targets, etc. I do a weekly update every week for 2Sigma trading. And then also I do a live member meeting at the beginning of each month. That's a Sunday night, very casual, but very important if you want to learn how to be a successful 2Sigma trader. These monthly live sessions are really invaluable. Then there's the portfolio tracker. We keep track of everything that we do here with our open and closed trades. And then, of course, the hot list, or I call it the watch list. So that's $90 for 90 days. Go to www.tradethirsty.com/90 to get this special offer. Here's just an example of what you'll see in the Discord. This is kind of par for the course. I'm commentating in the Discord every day the markets are open, and sometimes when the markets aren't open. The nice thing about 2Sigma trading is and for a guy like me that likes to talk, there's always something to talk about. So most of my commentary will be in the form of the Discord room. So I'm just one guy with a bunch of techie smart people helping me put all of this together, and we're doing it for you. That's why I've stayed in this business so long. I fell in love with it back in the 1990s with my dear friend Al Frank, and just the ability to help you all be successful investors and successful traders is super important. And so that's why we're doing this special offer. I think the publisher is limiting this to the first 30 members at this price, and then that's it. It goes, the price goes back up. So visit www.tradethirsty.com/90. I hope Jeanette is back with us, and she's putting that link into the chat or question box so you can access it right away. You can get involved in this really exciting service. November was a month to remember, and I think December is teeing up to be exactly like November was.
Jamie, right. I posted the link for you, and I don't know if you can see the questions to see the list of tickers.
Let me, now I can. Okay. Hey,
you can or cannot.
Places. See, look at me. I'm so bad. I left you all hanging. You got it. Way to go. Greg and Israel, that's awesome. Let's see. All right, there's a ton of tickers in here. Let me just take the first one. Burl, B-U-R-L. Now, the first thing I'm going to do, again, this is the key. I want to find out whether or not and where this stock stands. Is it a high-rated stock? And in this particular case, Burlington Stores would qualify as a top fractile stock. So the next question I have to answer is whether or not the stock, where it's trading vis-a-vis 2 standard deviations. And in this particular case, Burlington Industries, or Burlington Stores specifically, back in early November was trading 2 standard deviations below the mean, but today it is not. And so whoever asked about Burlington, that would not be a stock to trade. But because it is high rated, this is definitely one to keep an eye on, because like I said, the tapestry of the market can change on a moment's notice. So keep an eye on that one. The next name that somebody asked about was Apple. Apple, gosh, I haven't looked at Apple in a while, and there's a good reason for that. It is no longer a top-rated stock, and so I end the conversation right there. I don't even want to see what the chart is telling me because it's dangerous to do that. You might think that the Bollinger Bands are like, well, I can, woohoo, it's trading 2 standard deviations below the mean. I just want to get into it. No, it doesn't work that way. And again, I said this during the presentation, but if you think about why a stock price goes up, you've got to have, I know crypto is one crazy crazy thing. But not everything's like crypto. And there's got to be a rhyme or reason. There's got to be underlying value to, and I'm showing my true colors because I was taught by a fundamental Graham Dodd guy. Value investing is near and dear to my heart. So Apple Computer, because of its low ranking, is not a stock I would be trading right now. Tesla is another ticker, and I can look at this one real quick. Tesla, same thing. Tesla is not a high-rated stock, so I would not want to look at that one. AppLovin. Now this one is a high-rated stock. It is very strong fundamentally, which I like to see that. Now, what does AppLovin look like from a 2 standard deviation standpoint? Now, it too, just in the last 30 days, busted above 2 standard deviations below or above the mean. So this is not a stock. I would not trade AppLovin. Palantir, PLTR. Jeanette, there's no way I'm going to get through all of these, so I'll just keep going until you tell me to stop.
All right, I'll let you take 3 more.
Okay.
And then you can cover the offer, and then we'll let you get back to your weekend.
Okay. Palantir. Let's see. Palantir is a high-rated stock, so I'm going to be interested in this one. So it just depends on whether or not the market gives us an opportunity to trade it. PLTR and Palantir. See, the trouble with a momentum market like we've been seeing is a lot of these stocks are trading closer to 2 standard deviations above the mean. And I will tell you that my watch list, the last time I did my watch list, I had difficulty finding high-rated stocks that were trading near 2 standard deviations below the mean. It just, there aren't as many of them, mainly because the market has been on such a rip-roaring rally here since the election. So Palantir, I would not be a trader, Mike, of Palantir, but it is definitely a stock to keep an eye on because anything can change. SOXL, I'm not familiar with that one. Let me see if I'll find that here. That must be a micro. I don't see that anywhere. Is that an index, Barb? Just want to, maybe you can clarify what SOXL is. Amazon, real quick. And I know I can only do a few more of these, folks. So Amazon is not high rated. I would not be getting involved with Amazon. All right, so beyond the tickers, somebody is asking, what does your 1099 show? I'm not sure I understand that. That's a tax return. Is it prudent to see an expert's 1099 for 2023? Okay. So that's a good question. Just want to be totally upfront. There are 2 different schools of thought on this because, and I take a more conservative approach because I've been in the money management business. I do not trade these personally, okay? So anything that we talk about performance-wise is really just a hypothetical, but it is documented and totally straight up. So I'm not sure if that answers your question or not. Do you trade when the bar closes? After hours trading, I'm assuming that is what you mean there, and the answer is no. Again, I'm not really looking for, intraday market timing opportunities. So we are only in business when the market is open. All right, there's a few more here. Are you buying these stocks directly or as Yes, so good question, Phil. The trade recommendations are to get into the stocks directly. Now, behind the scenes, I have been looking at expanding this into options, but with time decay and really basically the time decay effect of options, I'm less confident that you can take what I'm doing here and apply it to the options market. But it is a good question and something I'm definitely keeping an eye on. Oh, let me do one last ticker because Louis and I talked about this one on one of our 2Sigma daily videos, which if you become a member, all of the videos are in archive. You could go, they're about anywhere between 5 and 10 minutes long. So they're not real long videos, but my goodness, great commentary in those videos. And you can see Louis and I recently talked about HIMS and hers. The ticker is HIMS. And that one is a high rated stock that sold off last week, I believe it was. I don't have the exact date, but it was announced that Amazon was going to be getting into the same business. This is crazy. Yeah, HIMS, so frustrating because this can happen too, where HIMS was trading 2 standard deviations above the mean when Amazon announced that it was going to get into their business. You know, what a business killer Amazon is, right? So the knee-jerk reaction of the market was to sell the stock, and it did, but it didn't sell it enough. It traded below the mean, but not 2 standard deviations below. So I did not get into HIMS. We talked about it. We wanted to get into it, and we were hoping we would get 2 standard deviations below the mean, but we did not manage to do that. And look at the chart on HIMS. It immediately, within 3 days, started to go back higher. And here it is today, 2 standard deviations above the mean again. So these crazy, whatever the reason is, like I said, we're agnostic to why a stock. Very few things are going to spook us, especially if the stock retains its high rating. All right, Jeanette, I'm totally spent. My voice is about to go here, so I'll hand it back over to you. Maybe do one more promo. 90 days for $90, folks. I truly do this out of the love for helping you guys make profitable trades. And in the 30+ years of doing this, I've been around many different financial publishing services, and I haven't been this excited about one. And my good friend Louis Navalier, just watching him, he's an investor. He's not a trader. He's like a kid in a candy store talking about 2Sigma trading. He just thinks it's great that I could come in and take my peanut butter to his chocolate and come up with something that was new and exciting and more importantly generates results. So if you want to get involved with 2Sigma trading, we've got a special price, super cheap, 90 days for $90. I believe after that 90 days, it's $90 a month, Jeanette. But www.tradethirsty.com/90 is the ticker symbol. Would love to have as many. Hopefully that 30-person limit sells out, and we can bring in as many people into this as possible. So thank you very much, folks, for sticking around. Thank you, Jeanette, for all that you do. Happy holidays to everybody. I'm going to sign off and hang out and go watch Trading Places this afternoon. How about that?
Oh, that's funny. Good. All right. Thanks, Jamie. That was fantastic. And Jamie's offer, y'all, is tradethirsty.com/90. It's $90 for 90 days. I've been following the service for quite some time, specifically in the Discord room, and he is pumping out a ton of value, not just great trades with the track record, the value that he's giving you every day in and out with that private Discord room is worth its weight in gold. So I go check Jamie out, tradethirsty.com/90.